As of now, I'm not convinced of it. I still think this is a bear market rally. I still think there's more shoes to drop in the risk asset market. I honestly think that stock market's getting ready to have a second half that is going to be atrocious, and my guess is it drags down crypto as well.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin and Ethereum. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
Let's talk about the strength that we've seen and why we saw this strength, and then we can get your projections forward.
Sure, absolutely. So as of now, anyways, Bitcoin remains just underneath a major technical level, this 30,500 level. We've hammered on it. We can see, in fact, on the chart right here, lots of resistance. We've tried to push above it. Each time we're failing, at least at this point. Yesterday, we pulled back pretty sharply and then rallied back today as there's kind of a risk-on attitude back in the market. But the bottom line is this 30,500 level, number one, it's an even number. So it's anytime you get above a 30,000 or a 40, there's always going to be a tendency to get kind of the last people in the trade, which weirdly enough is not the best thing, because once you get those last people in, you don't have a lot of new buyers. And so I think that's what's happening here with crypto. We're into this level where if we zoom out, this was the low from the 2021 bull market cycle. And it was also the low right here. And we've basically done a round trip. And I know I have a lot of lines on the chart, but we've done a round trip from that breakdown, which occurred in June of 2022, all the way back to where we are right now. So again, if we look back here, and again, this area here to here, that's where we're hammering on right now. And to me, that's a huge psychological level. And it's also a level where it will pivot me into thinking that the low is in. If we successfully hold above 30,500 for multiple days, I'm really looking for 5 to 7 days, then to me, you probably do have a low on Bitcoin in. As of now, I'm not convinced of it. I still think this is a bear market rally. I still think there's more shoes to drop in the risk asset market.
I know you are long-term bullish, and we can get to that, but I know short-term you have been bearish on Bitcoin. The rally, though, has that changed your mind?
No, the rally hasn't really. I mean, again, if we look back at the bear market of 2017, 2018, 2019, I mean, we had rallies from 3,500 all the way back to 10,000 and then back to 3,500. So you've had these bounces in Bitcoin that have actually even been bigger than what we're seeing here. We're just up around 100% or just under 100% versus back then it was 200%. So I think we have to keep that in mind. I also think that if you look at what the Fed has said, you have to be very careful here. So we do know that the SEC continues to sue and kind of put down regulation or the beginning structure of regulation in crypto. And then the Federal Reserve just came out recently and said, hey guys, we expect a slight recession. And if you're anyone like me and you hear slight and the Fed saying slight and they said transitory and we saw what happened, you have to be nervous about risk assets in the future. And that's where I am. I honestly think the stock market's getting ready to have a second half that is going to be atrocious. And my guess is it drags down crypto as well.
So you're calling for an atrocious second quarter. Can you give us any good news in the markets whatsoever, just for the people who want some bullish news?
Well, David, let's talk here. So here's some positives. So when we met in December and we had our live interview, you asked me what my favorite asset was for 2023. What did I tell you?
I think it was gold, right?
Absolutely. And gold has been a rock star. It's not outperforming Bitcoin at this point. That's true. But it has been an amazing mover off of the lows since the start of the year. And it honestly is going to go higher. You have all the makings for it. I mean, basically, if the Fed gets inflation under control, then you still have the case where it's probably because the economy's collapsed or in a recession. And again, that would then make people less likely to spend money. But again, that recession is a kind of a scary situation. So gold goes higher. If the Fed can't get inflation under control, gold goes higher in that scenario as well. So I'm still bullish on gold. Sure, it's had a big run, might get a pullback. We've had a little bit of a downtick, but I think by third quarter, you break above that 2075 level, and you're off to the races at least to 2100 by 2300 by year end.
Gold and stocks, what's with the correlation?
Yeah, good question. So the biggest thing for me is when you look at yields and the dollar, right? So if you look at the yields, in fact, we'll go to the 10-year yield right here. Okay, so the 10-year yield topped out last October. The dollar topped out last October. When did the stock market top out or bottom out? It bottomed out last October. So as yields have fallen, that's bullish for gold as well. As the dollar falls and pulls off of these highs, that's also bullish for gold. So you have those two things that the stock market right now likes, and also it's good for the bull case for gold. And I think lastly, you have to just be in the camp where you say, okay, inflation, yes, it's come down, but it's still elevated. And therefore, that's also a bullish case for gold as well.
Interest rates this year will grind higher, or will they stay the same? Because I do know that real interest rates have a direct impact on gold. Those two variables have been traditionally negatively correlated with each other.
Oh, so at least for me on the 10-year chart has this trend line here that we bounced off of. My guess is we're headed back down there by the second half of this year. That would be around 3% on the 10-year. So I actually think there's further downside on the 10-year. Another ETF that's a great way to follow it is when yields go down, the TLT tends to go up. It's kind of an inverse ETF here. And you have this beautiful sideways channel of bullish consolidation, which eventually tells me that the TLT will move up, which tells me yields go down. The only way yields are going down is if we do get a recession or at least a slowing economy that's significant, which then basically makes the Fed potentially have to start backing off their rate hikes in the second half.
Why do you think yields are going down? Is that a reflection of your outlook on the economy?
Yes, yeah. So it's not so much a matter of my views on inflation. I think that for the most part, inflation is going to come back to about 3% and be very, very sticky there. And that's going to be problematic for the Fed because they can't really stimulate in a massive way when inflation is at 3% already, because you stimulate at 3%, we go to 12%, 15% inflation off of the same type of money printing that they did in 2020 through 2021. So in other words, it's most likely the mere fact that you're going to see the economy really stutter. I think you get into a recession in the second half. In fact, the Fed basically said that just a week ago. Interestingly enough, the stock market has ignored it. Risk assets have ignored that. But again, the Fed is telling us exactly what they're expecting. And I always look at it like it's going to be worse. If the Fed says something, always think 3 steps worse than what the Fed is telling us.
Wait, what did they say exactly? They said there's going to be a recession?
Yeah, last week they said to expect a minor recession. A minor recession, or I don't know what the term was, but it was basically like, oh, just a tiny recession. But again, if you're like me, and I said this at the beginning, remember, they were like, oh yeah, we'll have inflation, but it's transitory. So it's one of those scenarios where, to me, they always try to sugarcoat because they don't want to scare the markets and cause a collapse. But smart investors have to start prepping for a worse recession than what they're saying. And again, that's just risk management.
You hear a message like that, what's your move? What's your go-to move? Do you short the markets? Do you do nothing?
Yeah, well, there's no doubt about it. I've been inching into shorts. And again, I'm one of those type of people that as a trader, I've learned my lessons in the past. So I inch into positions. I don't go all in. So I've just been inching in one toe at a time in the water here on the short side of the market, a little bit of the Qs short, a little S&P short, and kind of just preparing for what I think is coming. And I also think going into earnings season, I mean, we're basically just starting earnings season now. There's going to be a lot of negative revisions, in my opinion, or lowered forecasts. And that's the market, to me, is not prepared for that. If you look at like the forward PE of Microsoft, the forward PE of Apple, there's no preparation for any type of recession in that valuation. And that will have to reset at some point when the market comes to that realization that the Fed is telling the truth, that there will be a recession.
What signs, indicators have you seen yourself, either from the data or with your own personal life and your observations, that may point to a recession in the U.S.?
Yeah, so the first thing, and this again, the market has an amazing way of ignoring, and one of the topics, or one of the things I always say is the markets don't care until they care, right? So last week on CNBC, I happened to catch Warren Buffett saying that he has a retailer that he owns, right, and that Berkshire Hathaway owns. Year over year, their sales of this retailer were down 22% year over year. So to me, that was a shocking statement. I mean, that is a massive decline in revenue, and the market again ignored it. Nothing big, nothing to see here, essentially. So those type of things I'm picking up when you have big players that know what they're talking, the David Teppers, the Warren Buffetts, these big name hedge funds that you have respect for because they're accurate.